Welcome to the Hamsey Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Monday, October 8, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 623. Nasdaq advanced decline differential closed at negative 710. We had 13 new 52-week highs for the S&P 500 and 1 new 52-week low for the S&P 500. For the volatility, 244,000 contracts traded on the VIX today, with 26 million in total premiums paid. For the dollar-weighted put-call ratio in October, we saw a 2.6, which is bullish, with 47% of the total premiums paid. And in November, a 1.15, which is neutral, with 45% of the total premiums paid. Okay, here we have the daily chart for SPX. We were down 5 candles today, or 0.35%. Important to see here, we're still holding the zero sigma line. You can see it here. It has been acting as somewhat some resistance here on the very short term, and we're gonna look at more of what we're seeing here. We did a sell-off on Friday with the jobs report. We did spike up, and then we came down throughout the day, finishing lower, which was very negative here for the market today. We continue to our way down on the global concerns about growth. So here we're seeing not much buying attention after we got pretty good numbers on Friday. So from here on, we're looking for targets of maybe lower than here, after we're seeing that we had several attempts to go higher and no go. Nobody, maybe looking like no buyers from here. Tomorrow, earnings season starts, but the important numbers are gonna start coming Friday. JP Morgan and Wells Fargo start Friday, and maybe that come some boost here the market, maybe at least give some volatility. Sigma channel width here on the daily chart, very contracted so far. We could get a little more compressed. As you can see here on September, we were very compressed before the breakout. So from here, we're watching maybe the zero sigma line right now at 1451.85. That's gonna be our support, and if we are able to hold that, we're maybe looking for 1472 on the upside. That's gonna be positive 2 sigma, so that's the target on the daily chart. If we do break that zero sigma on the daily chart, maybe looking for 1441, that's negative 1 sigma. On the 60-minute chart, you can see it here. We are at weekly pivot. Not much movement today, very low, a small range. And you can see here, we're looking maybe for a downside, 1442. That's the same place that we've talked about, 1441 on the daily chart. So in line here, that is if we break that zero sigma. If we do not break that zero sigma, maybe go for that 1472, and here we're looking for 1475 on the weekly resistance number 1. Those are the targets here in mind. Not much data coming out this week, so maybe some type of consolidation pattern again, and we'll continue on a very small range here. Let's go for SPY. Here we have the 60-minute chart for SPY, and very quiet so far. Here we were down 0.4%, and right now at 145.64 we are at weekly pivot. On the downside, maybe looking for 144.27, and that would be support number 1. On the upside, 147.60. Those are gonna be the important targets to watch here. If we come here to this chart, this is the daily chart. We're continuing to see lower highs and higher lows. You can see it here. We did not reach this high here, but here we have this upside trend line, this triangle starting to collapse. Maybe a couple more days, 2 or more, and then we get a breakdown or breakdown up. Based on the selling pattern that we've seen recently, Friday we got some selling pressure, and today again looks like maybe we're going to come and test here this 50-day moving average, another pullback. We're not getting much of a buying bias here at this point in the market. Let's go now to the Qs. Here's the Nasdaq ETF. Today was down over 1%. We are right now at the 50-day moving average. As you can see it here, we bounced off that level of 68.12 and finished at 68.35. The reason this one has been going lower, Apple has been a huge weight on this index, and we've seen some selling pressure on Apple lately. We want these levels to hold, this 50-day moving average, also in line here with these lows that we had last week. Very important level here for the Qs. Maybe we get a bounce to this 20-day moving average of 69.27. That's going to be the target. If we hold that 68.12, 69.27 is going to be our target on the upside from here. Pretty short target, but you can see here the volatility is pretty tight. Going to this chart, we're looking at the support, pivot, and resistance on this 60-minute chart. Looks like we are getting now gone through support number 1, almost touched it, 68.13, in line with our 50-day moving average. That's gonna be a good support here this week, so maybe start getting some position from here and looking for that 69.80. That's gonna be our resistance number 1 here on this chart, as you could see. Now the IWM, this is the Russell 2000 ETF, risk on, risk off ETF, and let's start here with this chart. Here we have the daily chart and some moving averages. We've been talking about holding this 82, 80, 82.50 level. We are holding it so far, but you can see here the moving averages have turned around now, pointing lower. The short-term moving average, here we have in red the 10-day moving average, and in green we have the 20-day moving average, both of them now pointing lower. Maybe we're gonna come here and test this 50-day moving average at 82.20. By the time we get there, maybe it's gonna be around 82.50, in line with our support that we've been watching very closely and we want it to hold. Clearly looks like it wants to go here, so we're looking for this 82.50, 82.20. That's gonna be our target here on the IWM. In case we get some type of a bounce, 84, 40, 54, that's going to be some type of resistance, the 20-day moving average. Keep that one in mind. And we're going to have to see which side we break, if we're going to test that 50-day moving average or we're going to break above the 20-day moving average here on the IWM. Let's go to GLD. Here we have the daily chart for GLD. And we did break the 10-day moving average, not important here. They're going flat right now, moving averages, and we want this test, the 171.36 for 20-day moving average. This is going to be very important. We want it to hold, maybe come, try this level once, bounce, try it 2 times, and then we could rally here to 175. That would be perfect. Here on the 20-day moving average, prove that it's good support and then go back again. So that's what we're looking here on GLD, testing that. In case we break those levels on the 171, maybe go lower here to this one, to this levels 169, 168 and a half. Those are gonna be the targets. So that on the downside, let's go to the weekly support, pivot, and resistance to see what the targets are from here. We're looking for the 171.47, very close here to the 20-day moving average that we just talked about, and maybe then go back, if we fail there, to 170.30 and 168.99. Let's call it 169. So pretty close to the targets we just talked about on the daily chart on the upside. Looking for 174, let's call it. That's gonna be resistance number 1, and then looking for 175.25. Those are here the targets on GLD. We have a special offer by TradeStation. Get your Hamsey Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great day, and I'll talk to you tomorrow.